Good evening, everyone. Thanks for joining us today for this webinar. We'll begin in next 1 minute. Let us wait for a few more participants to join, and then in next 40 to 60 seconds, we will start this discussion on interim budget. Thank you. Good evening, everyone. I welcome you all on behalf of SBI Securities for this webinar on interim budget. So today we will discuss what are the key highlights of interim budget and which are the various sectors where the budget allocation has been maximum and which are the key companies which will benefit out of this. So we have already shared this report on interim budget on with you all through various platforms. So first of all, it is available on SBI Securities website under research section. At the same time, in case you are a client of SBI Securities, you can ask your dealer and advisor to forward the report on your WhatsApp number. At the same time, report is available on Telegram channel of SBI Securities. So if you search SBI Securities under the Telegram channel, definitely you can join SBI Securities official Telegram channel, and we have already posted this report on on 1st of Feb late evening. So without much ado, let us begin. What were the key highlights of this interim budget? So I would like to break this key highlight into 5 to 6 points. First of all, this budget was very well balanced budget, clearly indicating that the intent of government is to drive the capex-led growth in the economy. And mind you, this is an election year where we all know that the country will be undergoing the general election in the month of April. And prior to that, there was an expectation that this budget may be populist budget and many freebies will be doled out to the agriculture community, lower strata of the society. However, despite being an election year, the budget has focused on capex-led growth model, and everything is in line with expectation. So first of all, the capex for fiscal year 25 has been increased by 11% year over year against the previous year estimate of 10 lakh crore. However, last year 10 lakh crore amount has been revised downward to close to 9.5 lakh crore. And if I take that as a base, then for FY25, the capex spend is likely to increase by nearly 17% to 11.1 lakh crore rupees. And that is the highest ever in the history of Indian economy. So this clearly shows that government is batting on front foot as far as capex is concerned, and this capex is driven across the multiple sectors, not only limiting to railways and defense. In fact, the entire large section of the economy which can have a multiplier effect. So whether it is railways, whether it is solar, whether it is hydrogen, nuclear, housing, roads, irrigation, auto, electronics, semiconductor, infrastructure. So entire gamut of economy has been covered wherein this capex will flow, and ultimately it will have a multiplier effect on multiple sectors which are mostly catered to the economy by the private sector. So ultimately, the government is taking first step in terms of spending the money, and the key beneficiaries will be many large as well as MSME companies in the private sector. The second important key takeaway from the budget was on gross borrowing. So gross borrowing has been in line with slightly below expectation. In fact, the street was expecting that the borrowing from the government in fiscal year 25 will be close to 15 trillion rupees, that is 15 lakh crore rupees. However, the government has said that on a gross basis, they are going to borrow almost 14.13 lakh crore rupees, that is 14.13 trillion rupees. And what happens when that government is borrowing less than expectation? Usually, this lead to the cool off in the interest rate in the economy. And to that extent, we have already seen that the 10-year bond yield in Indian market has already corrected by 10 basis point on the budget day. So right now the 10-year bond yield for India is close to around 7.06%, and the benefit of this is multifold. So first of all the PSU banks or the companies which are holding a large amount of government bond in their portfolio, they will see a one-time bump up in the earning in the March quarter. At the same time, with lower cost of capital in the economy, the entire economy, whether it is on the capex private companies or consumer retail consumer like you and me, they will benefit out of the lower interest cost. So that's the second important parameter. First is capex, second is the borrowing, and third important parameter is the fiscal deficit. So what is fiscal deficit? Fiscal deficit is the expected spend in the particular year, which is over and above the income of an economy. So when expenditure is more than income, that is known as deficit, and the fiscal deficit number was in line with expectation. In fact, it was far better than expectation. The street was expecting around 5.3% of GDP to be the fiscal deficit number for FY25. However, government has come up with the number of 5.1%, and it is in line with the earlier glide path which has been set by the government. And for FY26, which is the a year after FY25, we may see fiscal deficit coming down to 4.5%. And this is based on the assumption that Indian nominal GDP will grow by 10.5% year over year in FY25. Again, if real growth is close to 6 to 7%, and if we add 3.5% of inflation impact, which is mostly wholesale price WPI inflation number, then in case nominal GDP growth assumption is close to 11%, then we can expect the Indian corporates to also report at least sales growth in line with the nominal GDP growth. As we all know, many sectors have direct or indirect linkage to the GDP growth of an economy. So if GDP is growing at 10 to 11%, obviously the company, all the corporates will also report 10 to 11 or 12% kind of sales growth. And in case the commodity prices continue to remain benign the way it is currently, then obviously the profit growth will be better than the sales growth. So this at least corroborate the fact that the earning growth of Indian corporates will continue at least in FY25 and FY26 if economy continue to grow at 10 to 11% on a nominal basis. So that again give a lot of comfort. That offers a lot of comfort in terms of valuation and from a equity market perspective, that in case company continue to report a healthy earning growth, then at least market will sustain its current valuation. And the foremost and the last most important point is that there has been no change in taxes, whether it is direct or indirect taxes proposal, direct tax for in the interim budget. And maybe government has got one more window in the month of July. Once the new government is in place, they can tinker in a few sector basis the input from the various section of the society. So overall, a very healthy budget, capex-led growth budget, everything in control, no signs of populism, and the same has been digested by the market in a very nice manner. So we have seen post completion of the budget, we have seen market hitting new high. Although it was a momentary high, and post that we have seen some minor profit taking also. So market has digested the budget in a very well fashion. In terms of sectors which are likely to remain under focus post due to this capex, so there are multiple sectors which will remain under focus, and there are few new schemes which the government has announced. So foremost is the rooftop solar scheme for general public. So guys who are consuming less than 300 units of electricity on a monthly basis. So their government has proposed to set up a solar panel for 1 crore houses, and the detail of the same will be revealed very soon. So we will cover this scheme in detail as we go along during this webinar. So without wasting much time, let us quickly move on to the various sectors where government has announced various schemes, or how much budgetary outlay has been decided for the various sector, and which are the companies which are likely to be key beneficiary of this budget outlay. I forgot to introduce my team. So joining me today, are basically five analysts, all seasoned analysts, well experienced. So Rajesh Gupta, Rajesh, Sumit, Harsh, Monica, and Shweta. So all five analysts are with us for, and they will walk us through the various sector. So I will request Rajesh to please walk us through the defense sector and which are the key companies which will benefit in medium to long term based on this government policy or the spend during the fiscal year 25.
Thank you, sir. So let's look at the defense segment. I would request Sunny sir to take us to the defense part of the slide. Yeah, thank you, sir. So, friends, defense has been a focus area since last 2 3 years, ever since the war broke out between the Russia and Ukraine. And today, if you look at most of the countries spending money to strengthen their armed forces, and India is also is not an exception at all. So, India is spent close to 4 to 5% of its GDP on the defense side, and this year also, if you look at the number, this year the government has increased the allocation in defense expenditure by 4.5%. So 6.3 trillion rupees will be spent on the defense side. अब ये number काफी बड़ा है. Within that 6.3 trillion rupees, 1.72 trillion rupees, that is 1,72,000 crore रुपए केवल capital expenditure के लिए जाएंगे. That means that this money will be spent on acquisition of defense hardware. So what happened that when India procured the defense hardware, most of these are imported. But now, since the government is focusing more on Make in India, so we could see that most of the procurement will happen through the private companies and the public sector companies. Also, in case India tries to import these defense hardware from any other country, we have different offset clause which provides opportunity for the existing Indian company to get the orders above 300 crore rupees. So in that case, we are rest assured that most of these company which operates under the defense segment will continue to benefit, from the defense expenditure. तो जो प्रपोजल्स हैं ये साल के लिए द गवर्नमेंट वांट्स टू स्पेंड 1.7 ट्रिलियन 1.72 ट्रिलियन रुपीस ऑन द capex. Second is the 23,800 they are going to allocate for the naval fleet, and 6,830 crore rupees towards the naval dockyard and project. So if I have to give you the impact, how this budgetary proposal is going to impact defense industry. So as I told you earlier, that any capex done by the government, order flows back to the private sector company or public sector companies. So what happened, friends? Since the sector itself is diverse, okay, there are few companies specialized into few area. Therefore, we have divided the entire defense segment in 4 different categories, and the company operating in those categories will be the beneficiary. So on my right hand side, we have aerospace defense, where the company like HAL, L&T, Midhani, Azad Engineering, and PT Industries could be the beneficiary. HAL हम सब जानते हैं, ये कंपनी फाइटर जेट बनाती है, and this company makes the Sukhoi 30 MKI to other light combat aircraft. तो आज के तारीख में इस कंपनी के पास काफी ऑर्डर्स हैं, and if India tries to try to improve its overall aircraft fleet size, तो इन कंपनीज को ऑर्डर मिलेंगे. उसके अलावा L&T मिधानी हम सब जानते हैं, दिस कंपनी सप्लाइज द स्पेशलाइज्ड मेटल पार्ट फॉर एरोस्पेस टेक्नोलॉजी और एरोस्पेस सेगमेंट. तो यहाँ पे मिधानी को बेनिफिट मिल सकता है. फिर पीटीसी इंडस्ट्रीज आल्सो स्पेशलाइज्ड इनटू मेकिंग टाइटेनियम ग्रेड काइंड ऑफ ब्लेड व्हिच इज यूज्ड इन द एयरक्राफ्ट. सो वी हैव कैटेगराइज के ये सारी कंपनीज को बेनिफिट मिलेगा इन केस द गवर्नमेंट ट्राइज टू इशू द ऑर्डर टू प्रोक्योर डिफेंस हार्डवेयर. फिर सेकंड आता है मिसाइल सिस्टम. तो मिसाइल सिस्टम में वी हैव भारत डायनेमिक, सोलार इंडस्ट्रीज, प्रीमियर एक्सप्लोसिव एंड एस्ट्रा माइक्रोवेव. We believe that these company will be the beneficiary. Bharat Dynamics, we all know this company makes the short-range missile system like torpedo, which is used by Indian Navy, anti-tank missile system to rocket launcher. All these products are manufactured by Bharat Dynamics. So we believe that the order will flow back to the company like Bharat Dynamics. Similarly, solar industries provide explosives or other, I would say, warhead which is used for missiles, for example, BrahMos and Akash, etc. Similarly, same business model is for premier explosive. If you look at Astra Microwave, they provide a radio frequency radar system. So we believe that these company who operates under the missile system will be also beneficiary. Then we have military simulators. That means the company who provides the training equipment for armed forces. So we have a coverage company called Zen Technology, which supplies the simulators. Simulators are nothing but these are the specialized container which is used for the training of armed forces. And Zen is one of the few companies in the world that supplies this product, and they have got a strong order book. And recently they have entered into anti-drone system, which we believe that that market size is far more than the simulated market itself. So we believe that Zen technology will be beneficiary going forward. Plus, the other defense companies, the company which is specialized into ship repair and ship building, like Mazgaon Dock, or let's say Cochin Shipyard or Garden Reach. Now this industry is picking up. Earlier uh, we used to get our most of the naval ship get manufactured by the foreign entities, but now these companies have got a very robust infrastructure at their port. So they're now able to build the latest generation ship, but also they are capable to repair these ships. So we believe that the as the navy starts to expand its overall fleet size or look to really modernize it, I think the order will flow back to these company which basically provide the shipbuilding and ship repair services. So, friends, this is about the defense. Now, I give it to my colleague Sumit for his view on infrastructure. Thank you.
Yeah, thank you, Rajesh, sir. So, coming to the infrastructure segment, so naturally the capex in this budget has been increased by 11% year on year, and naturally infrastructure sector will benefit from it. So, coming to the individual segment-wise allocations, where there have been substantial increase in the allocations. So, first up is the Swachh Bharat mission, where the allocation has been almost doubled to 5,000 crores. And the major beneficiaries from this allocation will be the water treatment players, especially the sewage treatment, as well as companies laying the sewer network. So, companies like Vatek Vabag, Ion Exchange, Wellspun Enterprises, EMS Infra, Vishnu R. Prakash Punglia. All these companies have decent size order books already in their kitty, and especially focus of this government is on water treatment over the next few years, both urban as well as rural. So in rural areas, largely these plants and networks are largely not there. And again, in urban areas also, many urban areas are not well covered by the water treatment as well as the sewage treatment networks. So overall, huge spend is expected in this sector, both from the public as well as the private sector. Moving on to the next theme, that is the Pradhan Mantri Ayushman Bharat Health Infrastructure Mission. So under this segment, basically what the government is saying that the existing medical colleges as well as the medical infrastructure, that is hospitals as well as the other clinics, they need to be upgraded, as well as newer facilities have to be built up. So the government has announced that they will set up medical colleges in next to the existing government hospitals, and so that will create a lot of demand for construction companies. So companies which are specializing in buildings and other infrastructure segments. So companies like PSP Projects, Aluwalia Construction, NCC, Capacite Infra, these companies will largely benefit from this rise in the allocation. Again, the allocation here has been increased by 96% to 4,100 crores. Additionally, the states also will contribute because largely healthcare facilities are undertaken by states in association with the center. So overall, the spend again is going to be large in this segment. Coming to next, that is the metro rail projects. So already many cities are seeing massive construction of the metro projects. And in this budget also, the allocation has been increased by 9% to 21,330 crores. Now, infrastructure companies, so EPC companies such as J. Kumar Infra, ITD Cementation, NCC, these companies have largely done well over the last few years in metro rail EPC, and they are expected to gain a significant order book from this higher allocation. ITD Cementation also specializes in the underground metro, so a lot of cities where there are space constraints. Underground metro network will be required, and ITD cementation will be the major beneficiary. The allocation for Sagarmala, that is the port network, so that has also been raised by 33%. So again, beneficial for ITD cementation and other infrastructure companies. 12% increase in the allocation for Pradhan Mantri Gram Sadak Yojana. Also, the railway infrastructure, so railway station redevelopment. So there are about 1,300 stations that have already been identified by the government for redevelopment. So that will require again construction companies. So again, players like PSP projects, Aluwalia Construction, NCC, and Capacite Infra will benefit from it. Additionally, also the tourism infrastructure also has been in focus. So both center as well as states are going to focus on upgrading the infrastructure around popular temples and other pilgrimage spots, as well as other tourist places. Now, one important thing to note here is that these companies will benefit in the long term. In the near term, so there is some a month or a half until the election code of conduct will come into place, and thereafter for 3 months during the elections, we will see no fresh orders from the government, while these companies will keep on executing their current order books. And again, we expect that post the elections and once the new government takes shape, and by the July budget, again the order inflows will start coming in for these companies. So overall, in the medium to long term, plenty of opportunities exist in this infrastructure space, and these stocks which we have highlighted will be the major beneficiaries. Coming to the next segment of power infrastructure. So power again has been a focus topic of the government, and with the focus on renewables and the round the clock power supply that the government has promised upon. So the transmission and distribution infrastructure will require massive upgrade. And so the government has increased the allocation likewise in this budget, where they have increased the allocation for the reform linked distribution scheme by 39%. And there has been a 33% increase in the power system development fund. Again, the green energy corridor, which is nothing but the transmission lines which will carry the power from solar and wind power plants to our houses. So again, that green energy corridor segment has seen 38% increase in this budget. So overall, this will benefit the power equipment manufacturers. So transformers, rectifiers, Voltamp transformers, GET&D, Hitachi Energy, Salazar Techno. Then the EPC companies which will set up these transmission lines, set up these substations. So KEC International is a very big player in this segment. There is Kalpataru projects, Skipper, Bharat Bijli, and many other mid and small cap players. The cable manufacturers, so a lot of high capacity cables will be required, where again KEI Industries and Apar Industries will be the major beneficiaries. And the smart meter, so the government is focusing on reducing the transmission and distribution losses, and where they are incentivizing the states to set up these smart meters so that these losses go down, as well as the billing efficiency increases. And so the companies such as Genus Power, which is a very major player in this segment, they manufacture as well as install the meters, as well as GMR Power and Urban Infra and HPL Electric. So these companies are currently undertaking installation of these smart meters, and they are expected to benefit from this segment. So both infrastructure as well as power infrastructure has seen massive amounts of money being put into this budget, and they will be the beneficiaries. Coming to the next slide. Yeah. So there one more segment which is fast emerging both in terms of demand from India as well as exports is the electronic manufacturing. So this is one sector where the government is focusing on increasing the exports, and India becoming a leading manufacturer of electronics, and replacing China, which has a 40 to 50% share currently. So the budget has increased the allocation for the semiconductors and display manufacturing ecosystem. So this segment has been allocated 6,900 crores in this budget versus 1,500 crores in the last budget. So almost a four and a half times jump. And the PLI scheme for electronics, which is already underway, the allocation for that also has been increased by 36% to 6,200 crores. Now, recently we saw the IT hardware PLI coming up, where laptop manufacturers are planning to set up capacities in India. Then again, the semiconductors and the displays which are currently being imported, they will also get manufactured and tested in India. So overall, electronics EMS sector, that is the electronic manufacturing services, that is going to benefit immensely from both this budget as well as the overall demand environment. So companies like Keynes Technology, Optimus Infracom, Sirma SGS, we have also initiated coverage on that. Then Dixon Technologies, Amba Enterprises, PG Electroplast, Avalon Technologies. So these companies will be the major beneficiaries from this higher allocation. So coming next to clean energy, so I'll hand over to Harsh, who will take you through the. Thank you.
Yeah, thank you, Sumit. So now talking about clean energy, where we'll cover solar pumps, green energy, and then you have solar energy, wind energy. So the first is the government has stated that it will provide viability gap funding for harnessing offshore wind energy capacity of 1 gigawatt for achieving net zero emissions by 2070. And India has set a target of 500 gigawatts of renewable energy capacity by 2030, and 10 gigawatt capacity of offshore wind capacity by 2030. So for this, the government has planned to provide VGF, which is the viability gap funding, for two sites of the coast of Gujarat and Tamil Nadu. So offshore wind projects are basically, they provide greater efficiency in power generation as compared to onshore wind power projects, because there are no obstructions present, as it is done in the seabed and not on land. Also, the capacity utilization factor is also high, standing around 50%. So the key beneficiary companies in green energy are Borosil Renewables, KPI Green Energy. You have Gensol Engineering, Vari Renewable Technologies, Suzlon, Inox Wind, Inox India. Then the government has also stated on the coal gasification and liquefaction capacity of 100 million tons, and that will be set up by 2030. So this will help in reducing imports of natural gas, methanol, and ammonia. The implications for this will be that there will be an incremental availability of gas, methanol, and ammonia, and this will be positive for the city gas distribution companies and the fertilizers company for availability of natural gas and ammonia domestically. So the companies to benefit from these are, you have Coal India and Engineers India. Then the government has also stated on the rooftop solarization. So over here, this scheme is focused on all the households who consume less than 300 units For them the electricity will be free, and the central public undertakings will go and install the capacity at their places, and the government has increased the subsidy by 60%, and the remaining 40% is by loan, where the loan will be taken by the central public enterprise, and loan will be paid off by the excess unit generated within the 10 years. And apart from that, the excess unit which will be generated will benefit the households, and they will be able to sell the surplus to the distribution companies. The next you have that the government has stated on the phase mandatory blending of CNG, PNG, and compressed biogas, and the financial assistance of for procurement of biomass aggregation machinery. So this pushes towards the compressed biogas under the setup program, which is a very so in this Praj industry is a leading solution provider. So that is a beneficiary in this segment. Then you have PM Kusum scheme, which has seen an increase of 81% in the allocation to rupees 1,996 crores. So this scheme is for the farmers for the installation of solar pumps and grid connected solar and other renewable power plants in the country. So the major beneficiary for the PM Kusum scheme will be Shakti pumps. Then you have the allocation for National Green Hydrogen Mission has also increased from 100 crores to 600 crores, and the company's key beneficiaries in this segment will be Tata Power, NTPC, SJV, and JSW Energy. And to finance all these loans, you have REC, PFC, and IREDA. So yeah, so the overall implication is that to reduce the dependence on the fossil fuel, and this will also create higher demand for solar panels, wind turbines, and other equipments which is used in green energy. Now coming on to the next segment, which is railways. Yeah, thank you, sir. So in railways, the government has marginally increased the allocation towards the railway budget to 2.55 trillion rupees against 2.4 trillion for FY24. Then they have also stated that three major economic railway corridors program will be implemented under the PM Gati Shakti plan. So this will improve the logistics efficiency and also reduce costs. So the three major railway corridor programs are: the first one is energy, mineral, and cement corridors. The second is port connectivity corridors, and third is the high traffic density corridors. And third one is that the 40,000 rail bogies will be converted to Vande Bharat standards. So over here, the impact will be that it will benefit the infra EPC companies. So over here we have NCC, PNC Infra, RITES, RVNL, Ircon International. And then and for this corridor you have logistics, where the companies major key beneficiaries will be Container Corporation of India. Then you have Gateway Distriparks, Aegis Logistics, and Ganesh Benzoplast. This will also create demand for capital goods, and over here the companies to look out for are Cummins India, L&T, KEC International, Siemens, ABB India, and ACE. So talking about about the metal sector, there was no specific announcement, but indirectly, if we see, there was a budget allocation of 11.1 trillion towards the infra development. Then you have additional 2 crores houses to be constructed under the Pradhan Mantri Awas Yojana scheme for the next 5 years. Then you have key rail infra projects like 40,000 coaches, which will be converted to Vande Bharat, and expansion of metro rail and Namo rail, and solar rooftop installation for 1 crore households, and also the Jal Jeevan Mission, which has an allocation of PLI of approximately 70,200 crores. So overall, this will spur the demand for steel, structural steel tubes, aluminium, and stainless steel. So for steel, the benefit will be for Tata Steel. You have Jindal Steel, JSW Steel, SAIL. For structural steel tubes, you have APL Apollo, JTL Industries, Rama, High-Tech, Good Luck, etc. So for aluminium, you have Hindalco, Vedanta, Nalco. And for stainless steel, you have Jindal Stainless. Also that the 40,000 normal rail bogies to be converted to Vande Bharat. So in normal rail bogies, there are spherical rollers and cylindrical roller bearings used, whereas in Vande Bharat coaches, we have tapered roller bearings. So over here, the major beneficiary will be Timken India, who is the largest player, having approximately 40% market share. And the second beneficiary is SKF India. So these are the beneficiaries over here. Yeah, so that's all for railways and clean energy. Moving on to housing, which will be taken over by Monica.
Thanks, Harsh. So let's now see what all is there in the housing front in the interim budget. So the FM spoke about launching a new scheme for middle income group, those who are living in rented houses, slums, chawls, and unauthorized colonies. So they will be having the option to buy or build their own houses. Secondly, as we all are aware, the government had introduced Pradhan Mantri Awas Yojana with a view to boost housing for all scheme back in 2015. So the interim budget, the government has announced to build additional 2 crore houses in the next 5 years within this particular scheme, which is in view to meet the rising demand arising from the nuclear families and an overall general increase in the number of families which we are seeing these days. So accordingly, the government has increased its PMAY, that is Pradhan Mantri Awas Yojana budget by 49% for FY25 over FY24 revised estimates. So these announcements within the housing space will obviously lead to higher housing demand, and that will simultaneously create demand for other ancillary real estate products as well, such as plywood, ceramics, etc. So, what all companies will benefit from these housing proposals? So, in construction space, companies like Man Infra, Capacity Infra, PSP projects, and NCC will be the key beneficiaries. Because of rising housing demand, cement companies will also benefit, as a larger proportion of around 60% of the cement demand comes from the housing space. So in this particular space, companies like Ultratech, JK Cement, Dalmia Bharat, Sagar Cement, JK Lakshmi Cement are likely to be the beneficiaries. Then as we talk about the growing demand for the ancillary real estate products as well. So in this particular space, companies like HIL, Kajaria Ceramics, Century Plyboard, Visaka Industries, Sayadri Industries, and Everest Industries are some of the key beneficiaries. So similarly, this will also boost the demands of PVC pipes, and in this space, Prince pipes, Finolex pipes, Astral are some of the key beneficiaries. Then talking about the agriculture and allied sector. Yeah, so in agriculture space, the FM had announced PM Matsya Yojana in Union Budget of 2019 and 20 to reduce infrastructural gaps in the fisheries sector. Now, in that particular scheme, the government has stepped up that scheme so as to enhance the aquaculture productivity from 3 to 5 tons per hectare, double the exports of seafoods to 1 trillion rupees, and also set up 5 integrated aqua parks. So all this will generate around 55 lakh of employment opportunities. And some key companies to benefit from these are, Garware Technical Fibers. This company is into the fishing nets and aquaculture cages. So as the government has stepped up the PM Matsya Sampada Yojanas, which will boost aquaculture activities. So Garware Technical Fibers can likely benefit out of this proposal in medium term. Another company in this particular space is Avanti Feeds, which is into the shrimp feed business. So Avanti Feeds can also benefit out of this scheme. Then secondly, in order to boost dairy industry and animal husbandry, the government will increase its efforts under the already existing schemes such as Rashtriya Gokul Mission, National Livestock Mission, and Infrastructure Development Funds. So, as the FM already stated in a budget speech that India is the world's largest milk producer but has low productivity of milk animals. So, in view of that, the government is actually trying to improve the overall animal health, because though we have the largest milk producing country in the world with the highest number of milking animals, but if we see that in most cases, these animals are having internal diseases. So all the companies which are there in the animal healthcare business are likely to be beneficiary of this. So one is the Sequence Scientific, which is into the animal healthcare segment. So although this company derives a majority of its business from outside, from international markets, the company derives around 8 to 10% of the business from Indian markets. And this particular segment of the company can see a good growth over the medium term. Another company, Hester Biosciences, is also into the animal healthcare space. Though the company's major business comes from the poultry vaccines, it also makes vaccines for animal, and also makes animal healthcare products. So Hester Biosciences also, to that extent, will benefit from this particular scheme. Then talking about the major or key announcements in the pharma space. So In the pharma space, first of all, the government has increased the overall healthcare expenditure budget of to rupees 90,170 crores, which is up around 13.8% over the revised estimates of FY24. Also, the government has increased the outlay in development of industry scheme to rupees 1,300 crores for FY25 against 1,250 crores for the revised estimates of FY24. So these will be positive for the overall pharma companies in the medium term. To that extent, the government has also increased outlay in the PLI scheme, that is Production Linked Incentive Scheme for the pharma space, to rupees 2,143 crores for FY25, from rupees 1,696 crores in the revised estimates of FY24. So all these, increased allocation in the health expenditure budget and increase in the pharma PLI scheme is to make India, Atmanirbhar in the industry of bulk drug and APIs. And a lot of companies in the Indian pharma space makes these bulk drugs and APIs. So some key beneficiaries in this space will be Sun Pharmaceutical Industries, Cipla, Dr. Reddy's, Biocon, Alembic Pharmaceutical, Natco Pharma, Strides Pharma, and Polymedicure are likely to benefit from this scheme in medium term. Also, some other announcements were in the pharma space were extension of healthcare facilities under Ayushman Bharat to all ASHA workers and Anganwadi workers. So this will also be, slightly positive for the pharma space. So next, talking about some key announcements in the financial services space, I would like Shweta to take over.
Good morning, everyone. Let's see what are the important budget proposals that are going to affect the financial sector. First of all, the budget raises the capital capex target by 16% to 11.1 trillion. All this capex expenditure are going to be financed by the banking or the NBFC in a directly or indirectly manner. So this initiative definitely is going to benefit all the banks and NBFCs. On the microfinance segment, the government has increased the target of Lakpati Didi from 2 crore to 3 crore. This initiative aims at training the women in the self-help group so that they can earn a sustainable income of at least 1 lakh per annum per household. The NBFC and the MFI segment will be a key beneficiary of this scheme, and we like Satin Credit Care in the MFI space. In the housing space, government have increased the allocation for interest submission scheme to rupees 22,600 from 18,500 revised estimate. Further, it has increased the allocation from Pradhan Mantri Awas Yojana scheme by 49% to 80,671 crore. Government has come up that it will launch middle class scheme for buying and building their own house. Further, it has stated that it will build 2 crore houses over the next 5 years under the PMAY scheme. Some of the housing finance which will be the key beneficiary of the schemes are LIC Housing Finance, PNB, Home First, Indiabulls Housing Finance, especially which are into the retail financing, the ticket size of 20 to 35 lakhs. On the NBFC IFC segment, the government has provided that they will finance the viability gap funding for wind energy for an initial capacity of 1 gigawatt, as well as set up solar rooftop solar connection for 1 crore household. PFC and REC are the nodal agency of the government in this scheme. We expect IREDA, PFC and REC will be the key beneficiary of the scheme. That's all from my side. I'll hand off the mic to Mr. Sunny, sir.
Yeah. Thank you everyone for your inputs on each and every sector. So I think there is some demand in Hindi also that what is the conclusion. So I would like to sum up this in Hindi में एक बार मैं sum up करने की कोशिश करता हूँ कि ये जो बजट रहा है ये पूरा इन लाइन विथ एक्सपेक्टेशन रहा है. गवर्नमेंट का जो फोकस है वो ग्रोथ, कैपेक्स ड्रिवन ग्रोथ पे फोकस रहा है. इलेक्शन का साल है, फिर भी गवर्नमेंट ने कहीं भी ऐसे कोई पॉपुलिस्ट स्कीम होती है जिसमें जैसे कि पीएम किसान स्कीम, जहाँ 6,000 रुपये साल के किसान को दिए जाते हैं, वहाँ एक एक्सपेक्टेशन था कि ये बढ़ करके 8,000 या 9,000 रुपये किए जाएंगे। या कहीं भी कहीं मिडिल क्लास या लोअर स्ट्रेटा ऑफ सोसाइटी इलेक्शन के चलते हुए उन्हें कोई एक्स्ट्रा बेनिफिट नहीं दिया है गवर्नमेंट ने। तो पूरा ग्रोथ ड्रिवन बजट है। बोरोइंग साइड में जो गवर्नमेंट की जो बोरोइंग रहेगी मार्केट से, वो इन लाइन विद एक्सपेक्टेशन है। एट द सेम टाइम फिजिकल डेफिसिट भी इन लाइन विद एक्सपेक्टेशन है। टैक्स रेट में कोई बदलाव नहीं किए हैं गवर्नमेंट ने। ओवरऑल अगर हम सेक्टर स्पेसिफिक बात करें तो ऑलरेडी काफ़ी सारे सेक्टर में गवर्नमेंट की जो केपेक्स की जो प्लानिंग थी FY24 में थी, में भी थी, और 25 में भी ये कंटिन्यूस हम देख रहे हैं कि जो केपेक्स है इसके ऊपर गवर्नमेंट का जो फोकस है बरकरार रहेगा। और सेक्टर वाइज ऑलरेडी डिटेल सभी एनालिस्ट लोगों ने काफ़ी बखूबी आपके साथ डिस्कस कर लिया है। हालांकि अगर मैं स्टॉक प्राइस के लिहाज से बात करूं तो कहीं ना कहीं ये जितने भी सेक्टर है जो मोमेंटम में थे, जैसे डिफेंस हो गया, रेलवेज हो गया, फॉर दैट मैटर पावर हो गया, रियल इस्टेट हो गया, स्पेशली ऑन रेसिडेंशियल साइड, फाइनेंशियल सेक्टर हो गया, तो काफ़ी सारे सेक्टर में ऑलरेडी इसका बेनिफिट हमने आते हुए देखा है। और स्टॉक प्राइस भी अच्छे खासे रैली कर गए हैं पिछले 9 से 12 महीने में। अब यहाँ से अब आगे की रणनीति क्या होना चाहिए मार्केट को लेकर के? ऑब्वियसली एक बजट तो एक बड़ा इवेंट था, इसके अलावा जो बाकी के इवेंट है ग्लोबली वो भी हमें हमारे रडार पर रखना चाहिए। तो पिछले हफ्ते में बेसिकली 2 बड़े इवेंट हुए। एक यूएस फेड का जो मीटिंग आउटकम आया वो इन लाइन विद एक्सपेक्टेशन था। हालांकि एक बात ये क्लियर हो चुकी है कि मार्च महीने में जो रेट कट एक्सपेक्टेड था यूएस इकोनॉमी में, अब वो कहीं ना कहीं पुशबैक हुआ है। मे बी जून के बाद शायद रेट कट अब हमें यूएस इकोनॉमी में देखने मिलेगा। और उसी के चलते हमने देखा कि यूएस में जो उनके जो रिस्क फ्री रेट है, बॉन्ड यील्ड है, उनमें कहीं ना कहीं थोड़ी सी गिरावट आई थी। 4.1% से गिर करके तकरीबन 4% के आसपास चल रहा है। सिमिलरली इंडिया में भी हल्का फुल्का जो 10 ईयर बॉन्ड यील्ड है उसमें हमने करेक्शन आते हुए देखा। और अब जो थर्ड क्वार्टर है, दिसंबर क्वार्टर है, उसके जो रिजल्ट है वो भी काफी सारे कंपनी के नतीजे ऑलरेडी आ चुके हैं। अब आखिरी के 5-7 दिन बचे हैं जिसमें बड़ी कंपनी के नतीजे आ जाएंगे। तो ओवरऑल आगे जा करके कोई बड़ा इवेंट अब मुझे नहीं दिखता है जिसके ऊपर मार्केट न्यूज फ्लो के लिए डिपेंडेंट रहेगा। अल्टीमेटली जो ग्लोबल फैक्टर्स हैं वही यहाँ से मार्केट को ड्राइव करेंगे, स्पेशली यूएस और चाइना के ओर से। तो हमें सबको पता है कि यूएस में भी नवंबर मंथ में इलेक्शन है, और उसी के चलते हम देखते हैं कि वहाँ डेमोक्रेट्स और रिपब्लिकन हैं, उनके ओर से कोई ना कोई स्टेटमेंट आते रहते हैं। जैसे कल डोनाल्ड ट्रंप ने एक स्टेटमेंट दिया कि अगर वो पावर में आते हैं तो चाइनीज गुड के पे 60 से 70% की इंपोर्ट ड्यूटी लगाएंगे। और उसका एक अच्छा खासा इम्पैक्ट आज हमने चाइनीज इक्विटी मार्केट में देखा। चाइना में काफी सारे स्टॉक आज लोअर सर्किट पे थे और मल्टी ईयर लो पे चाइना एज अ मार्केट ट्रेड कर रहा है। So in that case overall and one more important factor जो कि मेरे कॉलीग सुमित ने अच्छे से कवर किया, basically what will happen maybe February the last month where we may see order inflow from the government end, and then post that between March to June July there is a window of 3 to 4 months where we may not see any news flow as far as orders from government is concerned. So all the sectors which were seeing a very healthy rally in terms of stock prices, like railways, the defense, or for that matter, infrastructure. So all those sectors will feel vacuum in terms of news flow, and to that extent, all these sector may consolidate in terms of stock price henceforth. So if somebody is a short-term trader in the market, he has to be very cautious henceforth, because no positive news flow is expected from a domestic front, as well as the market will totally rely on basically two-factor news flow from global market, and at the same time how the liquidity is panning out based on the various factors such as bond yield and commentary from various politicians and central bankers across the globe. So if somebody is a short-term trader, please be cautious. Don't take any adventurous bet by taking leverage in the market. However, in case the volatility increases from the current juncture for next 1.5 to 2 months, then for a medium to long-term investor, it's a good opportunity to accumulate stocks which are doing well. So there are many sectors such as what we feel is that auto ancillary is one of the sector to be in from a medium to long term perspective. Metals, especially mining, we may see some news flow in terms of opening up of mine for lithium and other critical minerals. So many mining companies will see a totally new vertical in terms of business for themselves. In addition to that, a sector like cement, where they are the clear, they are an indirect play on infrastructure and real estate growth story of India. At the same time, the benefit of a lower input cost material is likely to continue in the March quarter as well. And once the election is over, then FY25 is the year where we may see again aggressive spending by government and as well as private sector on infrastructure and residential side. So that will drive a healthy high double-digit volume growth as far as cement sector is concerned. Banking. What I feel is that again the sector is in for consolidation till the time the pressure on net interest margin is not over. Maybe a March quarter or June quarter is the period where we may see net interest margin stabilizing for the banking as a sector. And one more trigger for the banking sector can be narrative of rate cut by Reserve Bank of India, which is again tantamount to the rate cut by the US Fed. So ultimately, the rate cut is something which will drive the banking sector. So for next maybe 3 to 4 months, we may see some consolidation in entire banking space. However, having said that, there are certain PSUs which are looking relatively cheaper as come on a valuation front, but one can't expect a very humongous return as far as banking sector is concerned over the next 3 to 4 months. So time for consolidation as far as banking sector is concerned, and if somebody is a medium to long term investor, it's a good opportunity to accumulate quality banking stock with an investment horizon of at least 12 to 18 months. So I think that's all from my side. We can open the floor for question and answer session. And if somebody has got any query, you can post your question in the chat box. So we have already received one question, one that is on fertilizer share. So somebody is asking, what about fertilizer share? Since we all know that fertilizer as a sector is uh, dependent on government subsidies, and recently we have seen that government is as a macro trend, government is reducing the subsidy dole out under the various scheme, and the same is the fate for the fertilizer sector also. And historically, we have seen that fertilizer sector rally ahead of the budget, and then post budget there is a pull off as far as the stock prices of fertilizer companies is concerned. So what we would recommend is that again the sector is dependent on monsoon, because in case there is a normal monsoon, then farmer tend to spend more on various fertilizer as well as on seeds. So monsoon is something that is expected to be normal, but again it is nobody's guess that how actually it will pan out. So what we would recommend is that one should not one should not allocate much portion of his portfolio in the fertilizer share. And in case you are still willing to invest in the fertilizer companies, so stick to quality businesses such as Coromandel, Chambal, companies which have got a cleaner balance sheet, have a decent size in terms of business, lesser dependency on the fertilizer subsidies. So I am not a very big fan of fertilizer companies, and I would still stick to the quality name rather than going down the rung in the mid or small size company as far as fertilizer is concerned. The next question is on Axis Bank from Sona. Thanks for asking the question. So Axis Bank, again, the company has reported a pretty good set of number as far as the December quarter is concerned. And as discussed earlier, the all the banks are struggling to mobilize the deposit so as to control the pressure on the NIM. And Axis Bank continue to remain one of our favorite pick as far as private banking, large cap bank is concerned. So kindly stay remain invested. However, the expectation of return in Axis Bank from the current level should be around 12 to 14% CAGR return from henceforth. So one has to keep in mind that as an economy, the credit growth outlook for the economy is close to 12 to 13%. credit growth, and to few percentage point here and there, private banks may outperform the systemic credit growth, and public sector bank may continue to deliver at par or slightly below the systemic credit growth rate. So Axis Bank, you can continue to hold in a medium to long term portfolio. The next question is from Pramodji. What is your outlook on IT in the near future? So thanks, Pramodji. It's a very nice question. So again, IT as a sector can be split into two parts. One is the tier one or large cap IT companies. So companies like Infosys, Wipro, TCS, they all fall under a large cap IT company. So what we have seen is that IT companies, ultimately the demand environment for IT company has still not improved, and all the companies have mentioned that it will take at least quarter or two for them to see a healthy revival in demand. But having said that, on the cost side, the supply side pressure has reduced significantly, so attrition rate is down. There is no aggressive poaching by the rival IT companies. The margins have stabilized. Now it is only a matter of time where when we start seeing a good healthy commentary coming on the demand front, especially on a short term demand side. On the other hand, artificial intelligence is something which is helping IT company to bring the cost lower at their end, at the same time at the end of client also. So large cap IT companies, what I feel is that will continue to trade in a range till the time we don't see a healthy demand growth outlook coming from them. On the other hand, the mid-size IT companies which are operating in a niche technologies such as KPIT, which is working on which is helping auto companies to move to the electric vehicle side. At the same time, companies like Cyient, which is working on ER&D side, or for that matter, Happiest Mind, which is working on newest technologies such as cloud and so on and so forth. Esalia Kale, which is again indirect play on booming airline industry globally. So these are the few IT names which we like from a medium to long term perspective. The next question is on REIT. Is REIT investment good for April to June period? So first of all, I would like to clarify that there is no specific period which is good for REIT. So REIT is ultimately, it is nothing but a kind of quasi equity instrument. The instrument is you can say it is something a middle line between the equity and debt. So REIT is nothing but a company which invests in the real estate. They earn income out of the basically rent from the property which is leased out, and that rent is then shared with all the shareholder in the form of dividend, right? So the average return which one can expect from any REIT instrument is close to 7 to 8%. This is pre-tax, and since the dividend income is right now taxable in the hands of individual based on your respective tax slab, so the return in terms of dividend income is not so handsome as far as REIT is concerned. And in terms of stock price appreciation, one can expect that the stock can appreciate in the band of 5 to 8% on an annual basis, subject to the revision of rental income every 2 to 3 years, and assuming that the ultimately yield pre-tax will be close to 7 to 8%. So it's a quasi equity investment instrument, and not so popular or successful in India because of this taxation impact which we see on the dividend. So if you really want to earn 7 to 8% return, I think fixed deposit, or for that matter some a debt mutual fund is a better option as compared to REIT if you don't want to take risk on the share price movement. The next question is from Sandeep ji. Chemical sector overview for next year. Sandeep ji, unfortunately, chemical sector continue to reel under trouble, and we have even going by the few numbers of the majority of the companies during this quarter. The outlook is still continue to remain subdued as far as chemical sector is concerned. However, having said that, there are many companies which are working especially on electric vehicle side. So companies like PCBL, we have recently seen PCBL acquiring one of the large chemical companies. At the same time, their carbon black business is doing well. So that is the one company which we like from a medium to long term perspective. Similarly, Neogen Chemical is the one company which is working on the EV side. Similarly, Archean Chemical, again a niche bromine player. So that company. So you need to identify certain niche chemical companies which are likely to do well. And since the China as an economy is in trouble, they continue to dump the chemical in the global market, and it's a global commodity. Most of the chemicals are impacted by the global demand and supply. Hence, the outlook is still not very good, or we can say somber in terms of a demand environment for the chemical sector. So don't expect much return as far as chemical sector is concerned over the next 2 to 3 quarters at least. But having said that, again, the short-term outlook may be clouded, but medium to long-term outlook continue to remain good. So many fluorine-based chemical players such as SRF, fluorine chemical. So that's a good opportunity to accumulate all these businesses for next 9 to 12 months gradually in the long-term portfolio. So the next question is on Kolte Patil. Kolte Patil going down continuously. Long-term view is to hold or sell in loss. Vivek ji, thanks for asking this question. Kolte Patil, again, the company continue to do well in terms of business, and recently they have mobilized some fund through QIP also. And what we have seen is that after a massive rally in all the real estate companies, last few weeks we are seeing a profit booking. So it is not only Kolte Patil, many other real estate companies have seen a stock price correction, and hence the Kolte Patil is also bearing the brunt of that. So nothing to worry as far as Kolte Patil is concerned in terms of business growth outlook. The correction may be in line with the other real estate companies. In case it is in your trading portfolio, I would recommend you to get in touch with us, and we can help you with the stop losses and support resistance level, so that you can accordingly manage your short-term trading position in Kolte Patil. Arbaj is asking question: is there any government support expected for Vodafone Idea? So very tough to answer this question. I think government has time and again said that they are not going to increase their holding in Vodafone Idea. Neither they want to become a majority shareholder in a Vodafone Idea. So it's a very tough question. Nobody can answer on behalf of government what are their plan for. But having said that, government keeps on supporting the large companies through various indirect measures such as postponement of debt repayment, so on and so forth. So I don't think so. Government is going to support the Vodafone Idea. Ultimately, it is the promoter and promoter group which have to infuse the fund in the company so as to ramp up their 5G infrastructure, and thereby they are able to retain their subscriber base in the company. The Gajananji is asking question: what about Nifty 50? So I think you are asking how can one invest in Nifty 50, right? So I think ETF route is one of the route through which one can invest in a basket of Nifty 50. In fact, there are few funds which have been recently launched which give equal weightage to each and every stock in Nifty 50. And if somebody don't want to take a large size exposure to one company, and if somebody want a equal weight exposure to all the 50 companies in Nifty, then there are certain ETFs which has been launched recently wherein one can participate in the Nifty 50. The next question is from Nabha Kumar Das. What about HDFC Bank investment? So Nabaji, what I feel is that HDFC Bank numbers will continue to remain under pressure for a quarter or two. And if somebody want to invest in HDFC Bank, then he should follow an SIP route, wherein for next 3 to 6 months one can gradually accumulate a certain quantity of share in the portfolio. And it will be the moment the street get a hint that bank is back to its growth trajectory, at least in terms of net interest income, NIM has stabilized, then the stock can deliver a 15 to 20% return in a span of hardly 1 month. So it's a trade where similar to what we have seen in the Geo Finance today, right? So Paytm under trouble and Geo Finance reaping the benefit out of that. The similar trade will be visible in HDFC Bank also. So there will be 1 month where we may see an exponential rise as far as HDFC Bank share price is concerned. So don't look at it on a daily basis. If you are really a medium to long term investor, then better to accumulate HDFC Bank gradually through SIP route over the next 3 to 6 months. Bilash Saha, what is your view about Urja Global? Please advise whether to hold or sell. Bilash ji, see what is happening, that because of the extraordinary focus of government on renewable and giving push to that, we are seeing a rally in all the old names which were linked to the renewable energy sector. So companies like Urja Global, which were defunct at one point of time, it is also witnessing a rally in terms of stock price. But what I would suggest you, that there are many good companies which are available in the market, which are actually doing quality business. They are reporting profit. So why don't we stick to such companies which are reporting a good set of number? In fact, KPI Green, covered by our analyst Rajesh. So we have initiated coverage on that company close to 800, 900 rupees. And right now stock has crossed 2000 rupees level. So there are many good names which are available in renewable energy space. So why to stick with a name where there is no sign of profitability or sales? So better to book profit in Urja Global and shift to better companies in the renewable energy space. Pankaj ji is asking a question on steel and cement sector. Pankaj ji, we continue to remain bullish as far as the cement sector is concerned, and steel also continue to be a structurally positive sector for us. If I talk about the steel sector, what I would suggest is that one can play this sector either directly through the steel companies such as Tata Steel, or for that matter, Jindal Stainless company. But at the same time, one can ride this sector through ancillary product companies like structural steel tube. So the way Harsh had discussed during the railway sector impact on the railway sector. So structural steel tube industry is one which one can ride, and one can play for the steel industry. Cement sector, we continue to remain bullish on that sector. It's one of the important sector in case India want to drive is infrastructure spend and drive the real estate growth story. So cement and steel continue to remain on our radar from medium to long term perspective. So next question is from Sahadev Chanda. What about HUL? So HUL again post the December quarter numbers, the HUL has went on record to say that they are likely to post a low double-digit growth over the next 2 to 3 quarters. And again, it's a contra bet at a current juncture. The entire sector is grappling with the problem of consumption slowdown in the rural belt. At the same time, the deflationary impact has led to the slowdown in the sales growth. So, in case wholesale price inflation goes back to 3 to 4%, to that extent, we may see a bump up in the sales after 2 to 3 quarters. And in case the monsoon is normal in the upcoming monsoon season, then we may see some green shoot of recovery as far as rural belt is concerned. So again, the story is very similar to HDFC Bank, a good business, good sector going through trouble at a macro level. So HUL, I don't think so, will deliver some return over the period of next 3 to 6 months. However, if somebody is a medium to long term investor, it's a good opportunity to accumulate again gradually. No need to deploy a fund at one go. Maybe on every deep you can accumulate few shares in your portfolio and then reap the benefit in the medium to long term after 6 to 8 months. The next question is on again LTI Mindtree. So again, LTI Mindtree has delivered a good set of number this time, and what I would suggest is that now what is happening is that the companies which are reporting a very good set of number, the market is discounting the positive story in the span of 2 to 3 days. And the similar story, the same thing is happening. The same thing has happened with LTI Mindtree also. So what I would suggest is that buy on dip should be the strategy as far as LTI Mindtree is concerned. The company continue to outperform its peers, and one can gradually accumulate the stock on dips in a medium to long term portfolio. The next question is on by Anuradha ji. Any view on Z Limited? Also, should we keep holding at Paytm? So first of all, my advice to you is that again Paytm is in big trouble, and what I would suggest is that better to exit from Paytm and shift to other better company. Nobody knows what is the impact of the current RBI ban on Paytm Bank, and hence I would not recommend you to holding on to the Paytm. In fact, the fresh money deployment is totally no as far as Paytm is concerned. And regarding the Z Limited, again, the merger was one of the important milestone for the company to infuse the money in the business and take the company back to the profitable level. However, having said that, during the last 2 years, what I feel is that the company's focus was not on business and it was more on merger, and that is the reason we have seen a total deterioration in the profitability metrics of Z Limited. Uh, the asset continue to remain lucrative, though someone will definitely try to buy out that asset. But it seems that this legal battle between the Z Limited and Sony, and very soon we may see Disney also joining the legal battle due to this ICC rights which Z Limited has got from Disney. So again, the legal battle will continue to for a slightly longer horizon. So what I would suggest is that better to wait, let the clarity emerge on the legal battle side. How the existing promoter will drive the business. Ultimately, fund infusion is something which is required for the company to get on the foot. So better let us avoid Z Limited and Paytm for a short to medium term perspective. The next question is from, I think name is missing here. Tell about Nalco target price for 2025. So again, Nalco, we are bullish on Nalco. The reason being that the company is a play on basically alumina, which is one of the key input material for manufacturing aluminium. Again, Nalco continue to remain our pick. Again, target price is something which I would not like to ascribe as of now. The reason being that ultimately the business is totally dependent on the global commodity prices and especially aluminium, and hence its input material alumina. But I would suggest to continue to hold the Nalco, and ultimately once this mining auction is done, maybe in case Nalco is able to win some mining block, then that can be an added source of income for the Nalco. So let us hold on to the stock, and in case company is able to win some mining block, we can expect 15 to 20% up move in Nalco in short to medium term. Will the next question is from HT. Will IREDA bubble explode, or we can expect a stable rise in the price? So, so we all know that the renewable energy as a sector is under focus by the government, and again, IREDA is one of the play on renewable energy financing project. So yes, we you are very right that the stock has appreciated significantly during the post listing. So at the time of listing, the price to book multiple was close to 1, and now it is trading at an expensive valuation of close to 3 to 4 times price to book, in line with PFC and REC. So I don't think so. In case there is an correction in entire PSU pack, then we may see correction in IREDA also. But obviously, the fresh position is not recommended at a current juncture. Maybe during the volatility, in case there is a correction in IREDA, then one can expect one can enter into the IREDA at a lower level. At current juncture, in case you are sitting on a substantial profit, I would recommend you to book a partial profit in IREDA. Anything can happen in PSU sector. So we have seen a massive run up a massive re-rating in the entire PSU pack across the board. And the correction, see, 10 to 15%, 20% correction in any bull market is a common thing. So PSU may also witness some such kind of one profit booking, and probably then post that we may again see a new range of movement coming in individual companies based on the earning growth of the company over the period of next 2 to 3 years. So IREDA, what I would recommend is that in case you are on profit, kindly keep on booking partial profit at least in IREDA. What about Karnataka Bank? Can we hold? Yeah. So again, Karnataka Bank continue to trade at a reasonable valuation. Bank continue to do well, and what I would recommend is that you can continue to hold the Karnataka Bank in a medium to long term portfolio. In case you are a trader and it's a short term position, so I would recommend you to get in touch with us. Through your dealer and advisor, and we can provide you support and resistance level in case you are a short-term trader or investor. Sandeep ji is asking, please provide this slide in PDF format. So Sandeep ji, this budget peak report is available on SBI Securities website. So if you go on SBI Securities website, there is one section known as research. Within research, you can go to the fundamental part, and within that thematic sector, thematic report, you will find this budget peak report. At the same time, it is available on Telegram channel of SBI Securities. And in still, if you are unable to locate this report, you can drop an email to us at research@sbicapsec.com, and we will be happy to provide you this report over email. The next question is from Krishna ji. What is the scope of Praj Industries? So again, Praj, we continue to remain bullish on entire ethanol as a space, and Praj is also one of our pick to ride this ethanol story. And Praj is also part of our Diwali pick. So although the government has intervened in this direct sugarcane used to ethanol manufacturing, so there is some restriction on directly converting ethanol converting sugarcane juice to ethanol, and that has led to some slowdown in terms of order flow from all these cane-based players. So during the con call, company has went on record to say that the grain-based distillery is the something where they are seeing a continuous order inquiry. However, the cane-based distiller have temporarily halted their plans to increase the capacity. But what I feel is that this is a temporary measures taken by the government prior to election, so as to keep the stock sugar prices under control, and hence it's a temporary measure. And Praj continue to be will be one of the winner for not only ethanol, in fact biodiesel and sustainable aviation fuel. So soon we will see an airline also using the fuel blended with one thing or other, and Praj is again a pioneer in that. So it's a good opportunity to accumulate quality business with a medium to long term perspective. Coal India, Coal India, what I feel is that at current juncture, the dividend yield is very attractive. I think 5% dividend yield also is available at the current market price of 435, 440. And so, however, we have seen a very good run up in Coal India during last few days. The stock has rallied from 375, 380 levels to 440. So what I would recommend you is that buy on deep should be the strategy in the Coal India, and it's again a play on thermal power growth story of India, and at the same time the various new ventures which the Coal India is pouring into, such as thermal power and at the same time coal gasification. So if somebody takes a slightly longer horizon, there are multiple avenues which are available for Coal India for driving its earning growth, and we continue to remain bullish on Coal India in with a medium to long term investment horizon. The next question is from Nadeem ji. Nifty is at all-time high. What is the next in line for Nifty? Yes, you are right. Nifty is trading close to the life high. And right now, what I feel is that market is in dilemma. So with no any big event which is in front of us, whether from a global perspective or from a domestic perspective, the market will continue to remain volatile on a lower side. As per our discussion with our technical team, 20,800 can be the levels which one can see in Nifty in case 21,400 is breached convincingly. On the other hand, in case Nifty continue to trade close to 22,000 levels, one can expect that the Nifty can go to 23,000 and 23,500. Again, it's a slightly dicey to judge the movement of Nifty at a current juncture. However, having said that, there are many stock specific opportunities which are available in the market, and rather than focusing on benchmark indices, henceforth one should focus on individual stocks or sectors which are likely to deliver healthy earning growth over the next few quarters. Though the next question is from Satish Kumar. So, what about Bank of India? So again, Bank of India has reported a decent set of numbers. So at the same time, the bank has guided that they will continue to maintain 11 to 13% kind of credit growth and 10 to 11% of deposit growth. And at the same time, CASA continue to remain healthy for this public sector bank, and that will help them maintain at least net interest margin. What I feel is that today's reaction was more to do with a healthy rally we have seen across the public sector bank on last Thursday and Friday, and today it was more of a profit booking day. So we continue to remain bullish on Bank of India from a medium to long term perspective. Jasbir Singh, when will HDFC Bank deliver? So Jasbir Singh, as per the latest commentary from HDFC Bank, it will take at least a quarter and two for a bank to deliver a healthy set of number. However, if I take a slightly longer investment horizon, the bank has went on record to say that they are going to double their balance sheet over the period of next 4 to 5 years. That itself means that on a merge entity basis, they are going to add one more HDFC Bank size of balance sheet of HDFC Bank in next 4 to 5 years. So the bank has become obviously giant, and whenever the merger banks are behind, I believe that the bank has got a good capability to deliver healthy earning growth. In fact, the December quarter was a quarter which was again in line with expectation only. Only to some extent, communication from the management was not very clear, and that has led to the stock price correction. So it's a good opportunity. I mean, it's one of the largest private sector bank in India, and in case the economy continue to deliver a healthy growth, bank like HDFC will have a very good time. However, the return expectation from HDFC Bank should be very pretty much clear that on a longer term basis, 15% CAGR is the return which one can expect from HDFC Bank. The next question is from Pramodji. What is your take on BDL? I have a emerging position. So Pramodji, Bharat Dynamic Limited, again a defense play. So we like the business, and at the same time, what I would suggest you that you can continue to hold on to your position. However, since it's an e-margin position, I am sure it will be a leverage bet. And what I would suggest is that since it's a leverage bet and volatility is likely to increase in the market, so better to adhere to some stop losses also on the leverage side, because we don't know which way the market can go. Either 1,000 point Nifty plus minus is we can see very often such a large outlier movement in Nifty, and to that extent the impact on Bharat Dynamic will also be seen. However, if I take a slightly medium to long term horizon, we are bullish on the Bharat Dynamic as a business. What I would suggest is that why don't you get in touch through your dealer and advisor and take support and resistance level for Bharat Dynamic, and at least maintain that stop loss since it's a leverage bet. So I think last 5 minutes. So we will wind up by 5:30. So last 5 minutes we will try to address the whatever is possible over the next 5 minutes. Okay. What about Tatva Chintan stock can I hold? Again, Satish ji, what I feel is that the company companies company continue to remain good in terms of business, but again, ultimately from entire chemical sector is under trouble, and we have seen a downtrend in the all the chemical stocks, and so as the Tatva Chintan is seeing a continuous downtrend in terms of stock price. Even for the December quarter, fundamentally the company has not delivered such good performance. So we have seen a profit, annual quarterly profit, which was in the range of 10 to 15 crore, that has gone down to close to 3.5 4 crore. And again, the entire chemical sector is under a problem. So what I would suggest is that it will take some time for stock to recover, and one need to be really a long-term investor in the at least for next 2 to 3 quarter. I don't think so any recovery, healthy recovery, which is coming up in Tatva, whether it is any chemical company or Tatva Chintan for that matter. So I will try to address two queries here. One is when will SBI Securities come in NSE IFSC market? So definitely, I mean, the team is working on that, and we do keep on launching various products which are in the market. And your suggestion is well taken, and obviously the team is working on launch of new products so that it can offer the entire bouquet of portfolio or securities which is available for trading in the market to its client. Next question is on Reliance and Larsen and Toubro. So again, we continue to remain on bullish on both the businesses, whether it is Reliance and Larsen and Toubro. So for Reliance, there are twofold trigger. One is the listing of its retail business. So retail is one of the star performer as far as Reliance business is concerned. And at the same time, due to the escalation of tension in the Red Sea crisis, we have seen increase in freight rate, and to that extent, landed cost of basically crude, basically refined crude, or for that matter, petroleum product has gone up, and all the oil and gas refinery companies work on a global parity. So to that extent, Reliance oil and gas business, oil to chemical business, will also see a healthy uptick in earning. And with the increase in gas output from the gas field of Reliance, Reliance is also expected to report a healthy upstream, healthy numbers on in the upstream business. So we continue to remain bullish on Reliance, and what I feel is that additional 10 to 15% return in the Reliance. So for the price target of maybe 3,400, 3,500 can be seen over the period of next 6 to 12 months, subject to the listing of retail business. And Larsen and Toubro, again, due to the adverse product mix, we have seen some pressure in the margin in this quarter. However, the order book continue to remain healthy. At the same time, its Middle East business is also seeing a good traction. So there was some concern that with the decline in capex spend by Aramco, will it hurt the Larsen and Toubro order book? So company has went on record to say that Aramco, their order book is pretty strong enough from a client like Aramco, where it will take at least 2 to 3 years to fulfill their order. And Aramco has been spending close to $50 billion since last 3 to 4 years every year. And this is a year of consolidation as far as Aramco is concerned. So maybe next year is the year where Aramco will again start spending aggressively on the oil and gas capex, and one of the key beneficiary will be ultimately Larsen and Toubro. So one can accumulate Larsen and Toubro with an price target of maybe 4,000 plus over the period of next 8 to 12 months. So what is the price target of Mannapuram? So what I feel is that Mannapuram, the fair value of the Mannapuram in a medium to long term is close to 180 to 190 rupees. So one can expect that price target. So sorry, the stock price is trading close to its fair value only. So 180 is the today's closing price, and what I feel is that maybe incremental 8 to 10% upside can be seen. However, their IPO of the microfinance arm got delayed due to some SEBI observation. So once there is some clarity on that front, maybe that may be one of the kicker for Manappuram stock to perform henceforth. And any uptick in the gold prices can be also one of that kicker as far as Manappuram stock price is concerned. So I think it's already 5:30, and we have tried to address each and every query from all of you. So thanks for joining us today, and I do look forward to your support for all the webinars. So this entire webinar will be available on SBI Securities YouTube channel. In case you have missed some part of the webinar, you can definitely go through that at your convenience later on. And I thank all my team member Rajesh, Harsh, Sumit, Monica, Shweta for sharing their insights on the various sector. Thank you all. Have a good day.